I'm joined by Amanda in studio. This is the part where we talk about the questions and answers. Amanda, remind everyone who you are.
Hi, so I've been on 2 podcasts so far. I am Amanda and I work very closely with Eoin through Prosperous. I'm the marketing manager there, so I do all the marketing for Prosperous and I help with Eoin on his own pages too.
On social as well.
Yep.
So it's always your job to try and collate these. I never hear these beforehand, but you've heard them all and you were going to, let's just jump straight into the first one.
Absolutely, let's get going.
Hi, Eoin, Richie here. I'm just wondering, when it comes to buying a house, am I better off saving for as long as possible and having as big a deposit as possible, or am I better off to get a mortgage as soon as possible and getting the maximum amount which is available to me? Thank you.
Thanks, Richie. Tell me, what do you make of that question? What is he actually asking?
So,
summarise it for me.
Yeah, he what he's asking is, should he continue saving and build up a very large deposit for a house, or should he
get a bigger mortgage?
And
have less of a deposit.
Yeah. Okay. I'm basically looking for the pros and cons.
The reality is unless you are guaranteed that you're saving at a rate faster than the increase in property prices, if property prices go up.
Yeah.
Okay. So if we knew property prices were going to go up by 5% and you want to buy a €300,000 house, 5% of 300,000 is 15,000. So unless you're saving more than 15,000 euros a year, you on that property in particular, you're going to lose ground next to property. Now, the opposite can happen. It can go down.
If you go for a mortgage?
No, if you continue to try and save.
Okay, sorry.
So if you're trying to outsave property prices going up, on a £300,000 house, €300,000 house, you need to save 15 grand in the year. Okay. And that's just to keep pace with the property price increase. Now, of course, property prices can go down as well.
Yeah.
And you might be better off having held off. But that's a guess. And I talked about in the introduction about when is the right time to buy. It's when you can afford it, when you love it, and you're going to stay in it long term. And what I would say is that in most circumstances, if you can just concentrate on buying what he loves, what he can afford, and he's willing to stay in long term, he would be better off getting onto the property ladder sooner rather than later.
Okay.
Is the straight answer to it. Mm-hmm. Obviously, the disadvantage to that is you're going to have a bigger mortgage.
Yeah.
But if he can afford the mortgage repayments, he's ticked one of 3 boxes.
Yeah.
But also, if he's got more capacity to save, he can build up a savings pot there to clear off the mortgage a bit sooner too. Does that make sense?
Yeah.
Did I answer his question? So in simple terms, Amanda, what I'm saying is it's unlikely he's going to be able to save at a pace that's greater than the property prices increase by, and therefore he's going to lose ground.
Yeah, and which is actually something I didn't consider when I listened to this question. So it's something, like the property prices are going up all the time.
What would your gut feel have been on that question?
I suppose, like from paying a mortgage and everything yourself, I suppose you kind of think the lower you can get your repayments, the better. Yeah. But it's not always the best thing to hold off.
It's not. And you also have to remember your mortgage repayments in the first couple of years are at the highest as a percentage of your salary. Yeah. So in 15 years' time, if he gets a 90% mortgage now or he gets an 80% mortgage now, in 15 years' time, it's not going to matter a damn to him.
Yeah. I remember my parents saying that to me as well.
Okay, let's go for question 2.
Hello, Eoin. We live in New York and we are currently looking about buying a home or rental property in Ireland. We are just wondering what is the best way of going about it, getting a mortgage, etc. Thanks for your help.
Isn't that deadly? New York. He's listening to the podcast. We were looking at figures in the office here the other day and we were seeing the people all around the world. It's mad, the people who are around the world who are listening in. Yeah. So his question, Amanda, am I right? He wants to know, he wants to buy here. He's planning on moving back here. How does he go about doing it?
Yeah.
Is that fair? Mm-hmm. You do need, the best thing you can do is get yourself a decent mortgage broker. Mm-hmm. Like get yourself as soon as possible. Like it doesn't matter how far out you are from, and this goes for anybody who's thinking about buying, sit down with a good mortgage broker and say, this is what I'm trying to do. You have a look at my accounts. Do you think that I need to change anything before? And the sooner you do that, the better. Most good mortgage brokers will help you with that because they know if they help you now and do a good job, they're banking a client for the future for themselves. Okay. The thing is the mortgage broker is going to give them a steer about their lending, what lending capacity they're going to have, how much they're going to be able to borrow. But also you need to come up with a big chunk of a deposit. If you're not going to be here and you're not going to be resident here and you're going to rely on your income, assuming they're going to buy when they're still over there in New York, and they're going to buy here, they're going to need a 40% deposit
30 to 40.
30 to 40% is what I've seen happen in the past, whereas a first-time buyer needs 10%. Because you're not in the country, the bank says, oh, hold on a second, we want you to have a bit more skill in the game. It's going to be 30 to 40% is what you're going to need. I'll actually post it after is exactly what it is, but I think it's 30 or 40%. As I said, I didn't get these questions beforehand, but you do need a much bigger deposit because the bank are kind of going, well, you're going to be harder to chase down if anything goes wrong here. So if you have more skill in the game, we're going to be happier to give you the rest of the money. There's only actually one bank off the top of my head. There's only one bank who's really in this game at all that are willing to do it. I won't mention them in case I got it wrong, but just to remind everyone, we don't do mortgages in Prosperous, but we have got, we are going there next year, aren't we, Amanda, head of marketing?
Yes. I was like, will we throw it in?
Yes, we will throw it in. We're going into the mortgage market again next year, but we're not there yet.
Yeah.
Does that answer his question?
I think it does, yeah. And just, I suppose, to go a bit further on that, and because I know another question that comes up a lot as well is he hasn't moved home yet. Yeah. But it's for someone who's thinking of buying. Isn't there a certain period of time when you move back to the country that you have to be back?
Great point, yeah.
Within...
So typically the big problem, once you land back here and if you've started a new job, the biggest, and this is the same for anyone starting a new job where they've just landed back here or they've just moved job, you're going to have your probation finished before a bank is going to look at you. Some banks will give you a mortgage approval and say, yeah, that's grand, provided your probation is finished by the time you draw down the check, by the time you're getting the keys to your house, we're okay with that. Probation is the big key thing. The other thing is don't think that any problems you have over wherever you are aren't going to follow you home. They are going to ask you to get a credit report from the country that you were in, and they're going to want to see that here. So you'll usually at your own expense, you're going to have to go and get the credit report and bring it back over with you. It's not a bad idea before you leave wherever you are to try and get that stuff, because it's just easier when you're there. If you have to walk into, or particularly if there's a problem and you want to get it fixed on your credit report, it's much easier to do it within the country you're in right now. Probation is an interesting thing. If you come back or you start a new job, probation, what I would say is if probation is the thing that's holding you back and the mortgage provider saying, no, can't give you a mortgage, you're on probation, talk to your boss. Go to your boss and say to them, any chance you'd finish up my probation? Are you happy with me? You're not happy with me? If your boss says yes, great. Everyone's winner. Right? If your boss says no, it's not necessarily anything to do with you. Your boss just might be worried about setting a precedent, or they might be worried about, they might be grand with you, Amanda. Yeah, I'd be happy to finish up your probation, but I'm just worried about Johnny coming in and hearing that you got it, and I have to say no to him because I'm not happy to finish Johnny's probation. So ask the question. If you get a yes, great. If you get a no, don't take it personally. It could be a precedent thing, or it could be a concern of something else and not yours. But sometimes your boss will finish up probation. Bosses love when people buy houses because you've now just become a bit more reliant on your salary. And it's a bit more stable and fixed, and it's a different phase in someone's life, and therefore bosses really like to help people. And you know what? I'm an employer. I own the business. And I love that.
To help out people.
But I also love that what we're doing in Prosperous allows people to buy a home for themselves.
Yeah, it's a nice feeling when you hear of someone actually going for a mortgage that's working for you. Because
you're kind of like, this has been created by all of us. And it's feeding everyone's getting fed out of it, if that makes sense. Next question.
Hi Owen. So my question is, myself and my husband, we're in our early 40s and we have 2 kids. We have at least 15, probably about 18 years left on our tracker mortgage. We didn't fix it at the start of this on advice from lots of people, including yourself, and we thought it was the right thing to do. We still do, but we're being absolutely annihilated with payments. It's gone up nearly €500 now from what we were paying. It's killing us. So I'm just wondering, is there any light at the end of the tunnel, or is there anything that you can advise that we can do? Thanks very much, Owen. Bye.
Absolutely big question. We get this all the time, Amanda, don't we?
And it's exactly why I said we actually had a couple of questions come in about tracker mortgages, all of kind of different variations, whether they should switch to credit unions, whether they should switch to a different provider, what should they do? I suppose...
And it's interesting because my answer to this question has been very consistent from the very start. If you are losing sleep over your repayments, you need to just give up the tracker and go and get fixed. And you know what, actually I've noticed, and you're going to notice it now I say it to you, I've been saying sleep for 15, 18 months now, right? If you're losing sleep, Some of the banks now have started putting billboards up, losing sleep over your mortgage. And I'm going,
I have actually noticed that.
have you noticed that?
Yeah,
and I'm absolutely claiming credit for that. That's me. That's us, Amanda. That's us out there, right? We're claiming that the marketing departments can't come up with their own thought processes and they're robbing ours, Amanda. Yeah. But if you're losing sleep over it, it's not worth it. Money is not something you should be losing sleep over. And if there's anything that will help you get sleep at night, if going fixed is going to help you get sleep at night, great. But if you're not losing sleep, it's just annoying you, just go, what should I do? What's the right thing to do? Let's just remind ourselves what a tracker is. A tracker is, it'll go up and down depending on what the European Central Bank do, right? A variable rate will go up and down depending on what the local bank decides, your bank decides they want to do. And it's literally that. Whatever they want to do, they can do. They can put it up, they can put it down, they can do whatever they want, right? We have gone from having mortgages in Ireland a year ago were 50% fixed, 25% variable, 25% tracker. Today, it's 50% fixed, 30% variable and 20% tracker. So 5% of people have moved off it. And we've seen a reduction in the variable. And actually, I could be slightly wrong. I'm absolutely sure of the 25 going down to 20, but some of them may have gone into the fixed. They may not at all gone to variable. And my problem with that is that the banks today in Ireland, we have gone from being one of the most expensive places to borrow money for a mortgage in Europe to the third cheapest the last time I checked, right? And if I was a banker, I'd be sitting here going, let's make it attractive for people to go fixed and give up their tracker mortgages because now we've got all the control back. We haven't given it all the way to European Central Bank. These tracker mortgages cost us money in the long run, okay? And we have no control over them as a bank. So the more we can attract people in, I don't think it's unusual. We still have the same problems with the banking system here and the things that they've been telling us for 10 years, the reasons why they've been giving us or the excuses they've been giving us because we pay more than anybody else does are still the same excuses that are there, but we're managing to be one of the cheapest in Europe now. It doesn't make sense to me other than to take people off their tracker mortgage. And ultimately the decision you're making here with your tracker mortgage is, do you want the European Central Bank to decide how much you're paying next month, or do you want the local banker to decide how much you're paying next month? To give that person a little bit of hope, if you go back and listen to Jim Power, the very first episode we did, we both agreed that we're probably plateauing now in terms of interest rate rises. We will probably stay here for another year. And Muireann Lynch agreed with us a week later where she said, and it'll probably come down in 2025 is where we're going to start to see the decrease. Even since we've recorded those things, there's been some macro numbers that have come out around the world to suggest that things are starting to slow down in terms of growth and everything else. And that could see inflation decrease quicker than they expected. But right now, it looks like we've taken all the pain and we will stay here. Unless things change dramatically, we're going to stay where we are. So I would ask you, if you've got this far and you're not losing sleep over it, I still think it's the right thing to do, particularly if that person where you've got 15, 20 years left on their mortgage. If you've got 5 years left in your mortgage and you can get a fixed rate cheaper than your tracker rate for 5 years, you don't care about what variable rate you're going on afterwards. So there are certain circumstances. And the last comment I'm going to make about trackers today is, this is general. Everyone's individual. There has never been a time where specific advice for your specific circumstances is needed. It's this. Don't give up the tracker without having a proper discussion about your finances with somebody qualified to be able to give you the advice on it. And don't get the advice off the bank. Like, absolutely don't. Like, talk about turkeys voting for Christmas. Like,
best interest for them.
Even though it's dressed up in another way. Amanda, I know you spend a lot of time trying to get these questions. Go on. Let's help us help you. How could your life be easier for getting these questions in?
So the best way of getting the questions to us is by voice note. We do like to get them by voice note, but if you can send them to...
you don't have the number now off the top of your head.
I do. 087 291 0507. That's 087 291 0507.
So that is, you can WhatsApp your voice note to that. And we're happy to get WhatsApp questions, voice notes with questions on them. You can send us suggestions for guests in the future, topics you want covered in the future, comments, queries, anything like that. Send it through there. That's how you communicate with this podcast.
And especially if you've an interesting story that you'd like to share.
We're always looking for interesting people. And we're nice, aren't we?
Yeah.
Okay. Amanda, thank you very much again.